What's up, everyone, and welcome back to Money Journey. Today, we are diving deep into the latest earnings report from Alibaba. The Chinese e commerce giant has been under the microscope, and its recent performance has sparked a lot of debate. We'll be breaking down the key takeaways, analyzing the good, the bad, and the ugly. We'll also discuss what these results mean for Baba's future and how it might impact your investment strategy. So, grab a cup of coffee, get comfy, and let's get into it. Alibaba is up 3% in the pre-market after reporting their latest earnings report. That was a profit beat, but a slightly miss on sales. Net income rose 58% year on year, but revenue came slightly under expectations. This has been a difficult time for the Chinese economy, and we might see that on the results. But let's look into today's latest earnings report. I always like to start with a word from the CEO. He said, "This quarter we continue to invest in the user experience and strengthen products offering to serve our consumers." That is in line with what he have said in the previous quarter, that Alibaba will invest in their product and trying to go into expectations of their clients. We enter in the long-term collaboration with industry peers to broaden payment and logistics service on Taobao and Tmall platforms. They are trying to increase their sales. They are doing collaboration with JD, and that is what he's talking about, which we expect will accelerate our overall growth. Growth in our cloud business accelerated from prior quarters, with revenue from public cloud products growing in double digits and AI-related product revenue delivering triple-digit growth. Bear in mind, the latest 2 quarters, their cloud business didn't grow very much. The growth of 1-2%. When you look into a cloud business, you are always expect them to grow double digits, but Alibaba cloud business is not going much in the latest quarter because they are lowering their prices, trying to get more clients so they can earn more profits in the future. That's why we don't see a lot of growth in the previous quarter, but this quarter was a turnaround. They grow almost double digits, so it was very good for their cloud business. We are more confident in our core business than ever and will continue to invest in supporting long-term growth. Our other business continue to improve their operating efficiency, with most of them continue to increase their profitability and reduce sales loss. This was a quarter of efficiency, I would say. They reduced expenses, so it was very good for Alibaba in that manner. Financial highlights: revenue grow 5%, EBIT and net cash position reduced. That was not very good. They said that their biggest segment, that is Taobao and Tmall group, grow only 2%. Taobao and Tmall has been the engine growth of Alibaba. They have been growing close to 10% or double digits, and this quarter was bad. I was expecting that commerce on China was not very good because we have seen difficulties in their economy. Chinese are not consuming a lot because it's been a difficult time for them, and that's why the Chinese government is doing a bazooka, doing stimulus in the economy. And even though they have started to stimulate the economy in September, this quarter ended in September, and this gonna take time. So I'm not expecting the consumer to recover in this quarter that ends in December or in the next one. It will take time. It's difficult to turn around an economy, so bear in mind that. Cloud Intelligence Group overall revenue, excluding Alibaba consolidated subsidiaries, grew over 7%. This is Alibaba Cloud is growing a lot. Tech companies are growing on China, and Alibaba will be the biggest beneficiary. I've been talking to you guys saying that Alibaba Cloud will be a big business in the future. It will be probably the engine growth of Alibaba. Even though last quarter was not very good, but in the future it will be very good. I'm extremely bullish on Alibaba Cloud, and they AI business, and I do really believe in this quarter we already seen it, but in the next one we will see their growth continue to increase. At least I'm expecting that from Alibaba. Their international commerce has been incredible, almost 30% growth this quarter, and has been one of the best subsidiaries of Alibaba. Share repurchase, they continue to increase their share repurchase. In the September quarter, they bought 4.1 billion dollars of shares, less than in June, but in September, in the beginning of September, the government have done a lot of stimulus and bazooka, and the price of Alibaba shares skyrocketed. So that might be the management of Alibaba didn't want to buy shares at a higher price, so that's why they stop, and that's very good. We don't want management to buy Alibaba shares at a higher price. We want them to buy at a cheaper valuation, and that's very good from their management, in my opinion. Then we come to free cash flow. Free cash flow was lower. Bear in mind, we see a net income growth, and on my analysis, this net income growth was not due to operations, it was due to other investments that their valuation sky high in the end of September due to the stimulus, and they have to take that as profits in their balance sheet, and it was not profits that Alibaba takes. So in that term, it was not a not very good quarter. Free cash flow was lower, and the reason for that is because they say they are investing a lot in their cloud business. From all their business, I want them to invest in cloud and AI. That might be the future of the world and of Alibaba as well, since they are the biggest cloud service on China. So they are investing in their future, as like other US companies. You have seen Google, Meta, Amazon, and not Nvidia, but all their cloud providers, Microsoft as well. They are investing a lot in their servers. So AI is in the early beginning, and companies have to investing a lot, and Alibaba is doing the same. So I like to see that. Their revenues came up around, let me see, 5%. Investors are expecting higher growth from Alibaba, close to 10%, 8%, and this 5% was a miss on their revenue. So it's not very good for Alibaba, but even though 5% is a strong revenue growth. Bear in mind, their biggest segment, Tmall and Taobao, barely grow. And for me, if Alibaba, that is in a Chinese economy that is doing bad at the moment, and even the economy doing bad, they basically maintain their revenue or a slightly growth, that is good news. And we have seen that from other Chinese companies like JD. It's been difficult to grow their e-commerce business, for example, but right now I think it was pretty solid, looking at all circumstances. Let's look into other segments. I always like to see revenue growth in their different segments. We see Taobao and Tmall grew 1% year on year. Cloud Intelligence Group reaccelerated to 7% growth, which was very good. Alibaba International Digital Commerce Group grew around 29% year on year, which is very good. Cainiao Logistics grew 8% this quarter, but overall in the last 6 months they have been growing around 12%. So this quarter was a decrease in growth. They have been growing faster. That is not very good in this quarter, but we have seen other segments pick up as well. So overall, 5% growth in revenue is not bad, but as an Alibaba shareholder, I was expecting more. I've seen really good things, like really good share repurchase. Growth, even though that is a difficult environment for Alibaba, it was solid growth. I will not lie to you. Cloud Intelligence and business is reaccelerate their growth, so we might see cloud getting bigger in the next quarters, and I will love to see that. I'm expecting the Chinese economy to start to recover. So probably in 2 quarters we might see Taobao and Tmall resuming their growth. And when will that occur? Alibaba will explode, in my opinion. So looking at the fundamentals, I will not take you much time on that. Alibaba is a great company, a great business model. Fundamental wise, it's very good. A wide moat in my opinion. Trading at the cheap valuation. I will have to update my Excel sheet, but it will not change a lot. Even though the growth is slower, it might change a little bit, but the business remains intact, and I still remain very bullish on Alibaba. Well, that was quite the earnings report from Alibaba. We saw some solid results across the board. Revenue growth was good and profits expanded, leading to a significant boost in net income. The company's share repurchase program remains aggressive, with a substantial amount of buybacks in the last quarter. This indicates that management believes the stock is undervalued, and they are taking advantage of the opportunity to increase shareholder value. Alibaba continues to be a powerhouse in the e-commerce and cloud computing industry. Its strong fundamentals, innovative products, and strategic investment position it for a long-term growth. So, what do you think about these results? Are you bullish or bearish on Baba? Let me know in the comments below. Thanks for watching, and I will see you in the next one. See you guys!